Meanwhile, let's welcome our next guest on the show. Amit Mantri is now with us. Mr. Mantri, what do you make of the developments at Manpasand Beverages? What are they pointing out to?
Yes, so no, the developments, we have only got some recent news, which is regarding the GST invoice issues as well as tax evasion. So, and the senior management now seems to be in judicial custody. So obviously, these are negative developments for the company. But our concerns on the company have been, for several years now. We have had issues with the quality of the financials that they've been reporting and whether the underlying business was as great as the company was claiming. So in that sense, it doesn't come as a surprise to us what's happening right now. But yeah, not that great for shareholders of the company.
Hi, Mr. Mantri. This is Mubina as well joining in. And yes, I think almost about 2 years ago, 2.2 Capital had written that note flagging off certain issues that they had observed in Manpasand Beverages. And this time around, reports are saying that there's actually involvement of fake/dummy units for availing fraudulent credit and committing tax evasion. So now the rhetoric has moved towards tax evasion. Mr. Mantri, is this something as well that you had penciled in when you did your first analysis for Manpasand Beverages? Because last year when the auditors had resigned, they said that the management is not sharing information. Do you think that the two may be connected, and is this something you had as well unearthed when you did your preliminary analysis?
Yes, so one of the concerns that we had regarding Manpasand was that the revenue numbers that they were claiming seemed to be too high. And based on-ground channel checks, talking to retailers across India, particularly in states where they were operating in, like Gujarat, Uttar Pradesh, Punjab, where they have manufacturing plants, we found it difficult to believe the overall numbers that they were reporting. So, even in, 2016, when we had written that report, they were reporting turnover of around 700 crores. And on ground, we were unable to get data which suggested that the report actual numbers could even be half of that number. So, it's the scale of revenue for us was always a question mark, and that's something that's now been highlighted through the dummy units as well as fake invoices that the GST press release talks about.
Right. Can you just tell us that how should one look into these companies with these sort of issues coming in? What are the signals that one should look forward to in any balance sheet or P&L once you get for the full 2-3 years business that any company is operating in?
Yes, so one thing is that going in itself, we as investors tend to put a lot of faith into audited financial statements. We take audited numbers to be absolutely sacrosanct. Our belief is that, especially in the Indian markets, even audited numbers are really not of that great quality. So if you're investing on the basis of putting a large amount of reliance on audited financial statements, you will often end up investing in companies where eventually the numbers turn out to be not that reliable later on. In the case of Manpasand particularly, we had seen the auditor resignation happen last year itself. And if you look at all past records of companies where auditors have resigned, a lot of bad news has later on emerged, and that's happened in majority of the companies where we have seen such issues. So anytime you see such a auditors resigning is a very rare event. It's very rare for an auditor to stand up and say that we cannot sign off on the company's financials because they are not providing us the information. So whenever you see such a feedback coming from the auditors, you have to really step back and see whether your investment thesis acknowledges the fact that the numbers itself may not be real.
All right. Okay, Mr. Mantri, thank you so much then for joining in. And